What's going on, guys? This is Aaron from Departures Capital, and I'm here with Michael Dalson, Chairman of Healthcare Accretion AI. It's a pleasure to have you on today, Michael. How are you doing?
Great. Thanks for having me.
Of course. So I'm excited to be talking about the company. Can you start by giving us a quick introduction to Vinergy Capital's largest holding, Accretion AI, and tell us a bit more about the business and your role at the company?
Yes. Well, I'm the chairman of Healthcare Accretion AI, and I founded that company along with a gentleman named Dr. Jamie Gerber, who's a professor at Yale Medical School. He had run a cardiology practice for many, many years before moving to his position at Yale. And he and I have worked together for a very long time. One of the things that we've always kind of been perplexed by, and I've been for 20 years in the healthcare business in the US. I'm based out of New York. And I was the executive chairman of Patient Home Monitoring, which was a company that did very, very well on the Toronto Exchange before I moved them to the NASDAQ exchange. Right now, it trades as Quipt on the NASDAQ and Vimed on the NASDAQ. Those two companies used to make up Patient Home Monitoring. And for 8 years, I was the executive chairman there. So I have quite a bit of experience in healthcare, in patient-facing services for healthcare. And ultimately, we were trying to solve a very basic problem, right? The very basic problem is how to meet the needs of patients with the resources of a U.S. healthcare facility. And that's basically our mission. And the question is, why has it taken so long to get to a point where that can happen? And the answer is artificial intelligence. And we can get into why that is.
Definitely. So, what sets Healthcare Accretion AI apart from its competitors in this sector?
So, the big issue that clinics have right now is, as I said, really matching resources with needs. And so certain patients have needs, certain clinics have resources. And right now, the way that's done is through what I'm going to call kind of very classical SaaS style or software as a service style businesses. So there are three kind of major software software products inside of a clinic. That includes the health records, electronic health records or electronic medical records. That would include a scheduling system. And then that would include a billing system, a revenue cycle management system. So those are the three kind of things that a clinic uses to try to run efficiently. The challenge is when you or I call into a clinic in the United States for a visit, we are given a time slot ostensibly basically on who calls first, right? If I call 1 minute before you do, I get the time. Physicians are usually given 3 20-minute time slots to meet a patient. They're usually given that over a 6-hour period. So they're going to meet 18 patients, 20 patients. And they, other than kind of them knowing, generally trying to remember or review the chart of the patient before the patient arrives, there's really no concept that the clinic should be organized more around a patient's need than just whoever calls in first. It'd be almost as nonsensical as, kind of taking names alphabetically and then ordering them that way. So, a U.S. clinic is a for-profit business, almost always a for-profit business. And if it's a not-for-profit business, they're still profitable, right? They're just using those profits not to return to shareholders, but to do some community good. So insurance companies generally pay for U.S. healthcare. Patients come in. And previously, it was very difficult to try to crunch data, right? How do you change what I kind of think about as an airplane model, a clinic into an airplane? When you get on an airplane, I get on an airplane, everyone on that airplane paid a different price for that seat. And everyone on that airplane has a mildly different experience. I may go to the club, you may not. I may get my baggage early, you may not. I may have a special meal, you may not. I may be able to skip the TSA line, you may not. How does all of that happen? Well, that happens based on needs. If I have a need to get my luggage first, I pay a little extra for that. If I have a need to go to the club, I pay a little extra for that. It's a little bit of an unkind word, but in economics, we call that price discrimination, right? The reason that's unkind in healthcare is because doctors really, they don't want to price discriminate, right? It's not really in their ethos to be picking rich people over poor people to treat. And so that's the challenge. The challenge today is that's kind of what a doctor would have to do. A good doctor is never going to do that. So really what you need is you need a lot of data to be able to predict what value a patient has and what needs they have. And when I say a value, I mean a revenue value. Again, that's a little harsh, but that revenue value is always correlated directly to their needs, right? A heart patient with complications is just more revenue to a clinic than a person with a head cold, right? And that's just reality. And so if I have a head cold and you have a heart complication, you should really be prioritized. Now it ends up that priority also by just, happenstance also is revenue oriented, right? So you want a kind of revenue triage for your clinic. It ends up that if you just do healthcare triage, you're going to do revenue triage, right? So you start with the healthcare proposition, you start with the need of the patient. It's been very difficult to predict patient needs, right? A patient need is very different than an airplane. You're going from LA to Toronto. That's a very obvious closed need. There are a certain number of seats, there's a certain number of people, there's a certain number of meals. The airline knows how to meet the needs of the client with a certain price point. In a clinic, it's a much more kind of democratic process, if you will. But it's also not very fair to the patient, right? Really, the patient who has the highest need should really be triaged first. So really what healthcare accretion AI does is it works with trained models that Jamie Gerber particularly has developed at his time really before Yale Medical School. But he, as a practitioner owning a very large cardiology practice in New Haven, Connecticut, he learned that, a lot of data could give you an understanding and a prediction of maybe the next 12 to 18 months of patient needs, patient revenues, and resource allocations inside of a clinic. The problem that he had and the problem that he faced was taking all this data. So that includes healthcare data, driving data, credit data, income data, zip code data, spending data. All of this data kind of makes up a person in a clinical sense. And what that data does, if you put it into a trained model, if you put it into an AI model, is if you put it into an artificial intelligence platform, which is really a scaled, you take this trained model and you put it into this engine that scales it, you can, for hundreds of thousands of patients, millions of patients, frankly, in a very short period of time, in a matter of minutes, you can put that data in through this matrix. We call it the Armada matrix. That's our intellectual property. Through this matrix that takes that data, weighs the data, and looks at the trends of the patient. How often are they coming in? How much time are they spending in the clinic? What kind of codes are you billing for that? Is the right doctor or physician's assistant or nurse treating the patient? Are you over-treating the patient, which you don't want to be doing? Are you under-treating the patient, which you don't want to be doing? All of that is really driven by all of this data and all of the trends. Up until recently, the computing power didn't really exist to do that. And even if it did exist, you would have to hire a lot of coders to be able to keep up with the dynamism of a healthcare clinic, right? Each of these patients is getting well. Some of them are getting worse. Some of them have complications. Some of them have illnesses. Some of them do, it's a very dynamic situation. So artificial intelligence today actually does give you the ability to take all that data, put it into a trained model, put it into an artificial intelligence platform, and out the other end, generally speaking, we've experienced come good predictions. And those predictions can be used to be able to better service the client, the patient, to better give the patient the need that, service their needs. And as a byproduct of that, and again, this is a good byproduct, the correlation is right, you end up having higher revenues per physician. So today, instead of a physician seeing 23 patients, with our data analytics system, and again, we don't replace the software, we don't replace the clinic, all we do is take the data, we crunch the data, we come up with our artificial intelligence prediction. Those predictions drive the schedule, and patients are scheduled differently. So you might have a physician one day seeing 36 patients for 5 minutes each, the next day seeing 6 patients for 1 hour each, right? And that's all driven by the need of the patient. And obviously, the outcome here, which is, again, a nice byproduct of the capitalistic healthcare system in America, is that the higher need patients generally have higher revenue, right? And if you can triage those and deal with the highest need patients in a clinic first and foremost, you end up increasing revenue per doctor per clinic with no additional cost. You don't hire more nurses, you don't hire more doctors, you don't pay more rent. You simply maximize the efficiency, optimize the efficiency of the clinic. So we are basically a data analytics company that uses artificial intelligence to optimize operations of a clinic. And what we don't do is buy the clinic, get involved in the clinic, run the clinic, sell the software, change anything. We're simply taking the data, repopulating that data through their existing billing software and scheduling software systems, so that essentially you end up financially triaging these patients. But for the patients, it's much better, because if I have a heart problem and you have a cold, I should go before you. And if I'm the owner of a clinic, I should go before you, right? Because I'm going to make the clinic more money. and I'm going to get treated better. And so I win as a patient. The clinic wins really as a business. The insurance company wins because the complications to the patient will go down, and it's all driven essentially by artificial intelligence and data analytics.
That's a very unique business. So before we dive into your strategy a little bit more, the company seems to have a highly experienced management team. Can you tell us a bit more about your key members and what they bring to the table?
Sure. So I've talked about Dr. Jamie Gerber, who's a professor at Yale at the School of Medicine. Myself, I was the executive chairman of patient monitoring. And so I've done a lot of deals in US healthcare, owned a lot of clinics. Another co-founder, Roger Green, who went to Harvard College, Harvard Law School, was the vice chairman of PHM. He's involved. We have a number of AI engineers from Cornell University that are focused on healthcare AI to help develop those trained models. So that's the main group that we're dealing with now. Again, we're a trained model company. Our IP is all on this matrix, understanding what data to pull, how to weigh that data, and then how to train a model so that as you put more data through it, it learns and it understands how to get better predictions and better outcomes from reading patterns. So the good news is this is a data analytics business. It's a high margin business. We don't have buildings and we don't have a lot of employees, and it's a tech business. It's truly a tech business. So as we start deploying this, and we're prepared to deploy it, in this quarter, quite literally the fourth quarter of 2023, we're going to start deploying this product, this data analytics product, in the clinics in the United States. We don't have a lot of cost, right? All of our cost has already been put into it. The development of it, really Jamie's years and years of operating one of the biggest cardiology clinics before his time at Yale Medical School. Obviously other physicians that we're dealing with at Yale Medical School are involved, lending some of their experience before they were at the medical school. So really, at the end of the day, it's a tiny group of very specialized people. But technology and disruptive technology sometimes is that way, right? When you think of Google or OpenAI, these are not brick and mortar giant businesses. These are businesses that are really driven by technology. And at the end of the day, especially with AI, that technology is key to create, but not expensive to deploy.
So you sold the business to Vinergy Capital, for an all-share sale. Can you tell us more about your strategy here?
Yeah, well, so obviously, I see this as a great opportunity. Vinergy has a couple of other holdings in some AI companies that had an openness and a willingness to take advantage of this fast-growing sector. They also signed an LOI recently with the artificial intelligence platform company that we were working with to the engine that basically scales up our trained models. That's a company, a privately held, backed company out of San Diego in California. I think they've signed an LOI to buy up to 4% of that AI platform or AIP. So what I liked about Alnor, the CEO there, is he really does see this vision of synergistic investing, right? He invests in our company. We may end up selling the rest of the company to Vinergy. If we do that, our intention would be to do that for shares as well. The view here I have is the shares are the upside. Why is that an upside? We're at the beginning of this, right? We're at the beginning of this AI revolution. We're at the beginning of really being able to use artificial intelligence and data analytics to improve healthcare for patients, to improve profitability and revenue for clinics, to improve health outcomes for insurance companies. This is the very beginning. So I don't want to get cash. I want to get stock, because I think we're going to see a lot of good growth, a lot of clinics take up our product. And most importantly, Vinergy is going to be making these other investments in partner companies that we use as vendors, companies that we have as customers. There's a lot of money to be made here. And as an investment issuer, Vinergy is in a very unique position to be able to not just invest in our company, but invest in our sister companies, invest in our customer companies, invest in our vendor companies, and really surround this opportunity either with majority investments or minority investments. But as an investor myself, that's my background. I really appreciate the idea that there's returns to be made off of investing in operating companies rather than operating the company itself.
I couldn't agree more. So when it comes to AI in the healthcare sector, can you tell us a bit more about the potential opportunity at hand, along with which segment of the market, you're targeting specifically?
Yeah, so I think we're looking at probably around 7,000 clinics as a customer base in second cities. So this would not be LA, it would not be New York, but as an example, it might be Philadelphia or Boston. It might be Oakland. It might be San Diego or Santa Barbara. These are a little bit more of suburban areas. They're areas that we're focused on: primary care clinics and also on specialty clinics, cardiology, oncology, nephrology. Those are the clinics that we're focused on just in terms of our market. Why is that? Well, we think those are probably the ripest clinics that are not necessarily attached to a big, Yale's a great example of this. Yale is a big, I think it's the 9th largest medical system in the United States. They're probably not a client of ours. Why? They're doing a lot of this. I don't think they're quite commercializing it like we are and taking it to the masses, but they've got a lot of money. They've got a lot of research. And in these big cities, you have a lot of that, right? So in some of the second cities in America, especially in the Midwest, you have a lot of clinics that are really truly for-profit operating clinics. They're not attached to a big research organization. They don't have sophistication in technology. That's where we can make the biggest impact. So that's our target market. What do we plan to do for those clinics? Well, as we've talked about, very simply, we're going to go in, we're going to analyze their data. We're going to be able to help them shape their schedule better so that they can maximize revenue per physician, and most importantly, maximize triage per patient, give the patient a better experience, and make sure the patients who have the highest need get in line first, the highest medical need get in line first. And we think we can do that together. We can maximize their revenue and maximize profit experience, or maximize patient experience and maximize profits simultaneously. And ultimately, again, we're going to do this and take a piece of the increased revenue. So again, our pricing model does not include the clinics having to pay us, right? We're going to increase their revenue per doctor, and we're going to take a piece of that revenue. We're going to increase their efficiency and take a piece of that profit. And as we are able to better manage their patients and better match their resources with their patients' needs, the clinic will do better financially. We'll do better because we're taking an upside on their upside. So it's a very easy program to sign up for. We're already in due diligence with a number of potential clients to see what we can do for them. So I think in the end, we're going to be focused on kind of suburban America, not big research institutions. Really, the bigger part of the market here is the suburban, fully owned, wholly owned clinics by doctors, maybe 10, 20, 30 doctors. They need the most help. They're focused on helping their patients. They're not focused on running a good business, right? And I think previously the biggest problem they've had is a lot of ideas on helping their business have harmed their patients. So good doctors just won't do that. They won't sell out their patients. So this is the combination of using artificial intelligence and machine learning to be able to maximize the revenue of a clinic, really by maximizing the healthcare in a clinic, by meeting the needs of the patients. And I think that's why it's so attractive, of a product. And again, none of this could happen with artificial intelligence technology where it is today. 5 years ago, you couldn't crunch the data. This matrix, this trained model we'd have would have been worthless because we wouldn't have the artificial intelligence platform to put it into that could scale it. And that artificial intelligence runs on NVIDIA chips, for example. Those chips didn't exist 5 years ago. So this AI revolution has made this possible. We're at the very beginning of it. And we obviously intend to ride that wave. We don't know of a lot of other people doing this. There's not a lot of other AI companies, doing this.
That sounds like a great plan, Michael. Well, thank you for all that information. Before I let you go, where is the best place for investors, prospective shareholders, to find out more information on the company?
Well, Vinergy Capital, the website is probably the best place to start. That will highlight healthcare accretion, AIs. We're one of their portfolio companies. We're the biggest portfolio company, actually. So it'll highlight our business. It'll highlight the artificial intelligence platform business that they signed an LOI with recently. It'll highlight some of the other artificial intelligence investments they have. And it will also share the investment thesis. Again, that's why I took stock in the company rather than cash. The investment thesis is very exciting. Ultimately, being able to make several investments into the healthcare services AI space is really why I'm a shareholder. I do want to make one last point. I had said earlier, why AI, why are we really unique in this AI space? Why aren't other people doing it? The reality is healthcare services is a tiny part of healthcare. Most of the lucrative business in healthcare is in medical devices and, most importantly, drugs. So most of the AI money that's going into healthcare is going into developing drugs, developing devices, creating very high margin, high capital cost products. Very rarely is artificial intelligence going into services. Services is kind of the crappy end of the model, if you will, if you're in business. It doesn't have the high margins. It doesn't have high barriers to entry. Ultimately, it's not the most attractive space to be in. That's why I like it. I like it because I can bring sophisticated managers, sophisticated technology into a business that generally is neglected. That gives me a huge edge in being able to sell it.
Keeping it simple, there's nothing wrong with that. So, best of luck with everything. Sounds like you've got a solid plan, and I look forward to having you back on, hopefully in the future, for more updates as things progress.
Well, as we start getting revenue in, there'll be a lot to talk about.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below, along with thoroughly reading our disclaimer. Thank you so much for watching, guys, and I look forward to seeing you in our next video.